Hello students. In the previous presentation we have talked about EUP calculations, and in this presentations also we are going to cover EUP calculation but under different two cost flow assumptions, which are FIFO and weighted average. Now what is FIFO? FIFO states that first purchased goods are the the ones that should be sold first. That's what first in, first out. Whatever you purchased first, you are assuming that is what I am going to sell first. You can imagine in Jan you bought an item that cost $10. In Feb you bought same item, but by the time the cost is $15. And in March you are selling this item for $20. Okay, you are selling this item for $20. So when you are selling this item for $20, what you are going to consider as the cost of this item sold? Is it going to be 10 or 15? Under FIFO it is going to be 10. So we are assuming the first in will go out first. That is what first in, first out. So this is the concept of FIFO. But under weighted average, if you take same example, you will value the inventory by dividing the total cost by the number of goods. So now here what is the total cost? It is 25. How many units? 2 units. So what's the unit cost? It is going to be 12.5. So here you are taking an average of the cost in which you purchased all your goods earlier. But here you are going to consider the cost of the first item as the cost of goods sold, but here it is going to be average. So when you are selling this item, now the cost will come as 12.5, whereas in FIFO it is going to be 10. So this is what the concept of cost flow assumptions under FIFO and weighted average. So one thing we have to know that under FIFO we have different layers of cost. Correct? January cost I am taking separately. Feb cost I am taking separately when I have to consider the cost of goods sold. But in average cost, we are just adding it all the cost we will add and divide by how many units of items we have. And you will get an average cost. So we will see this with an example. Here you have ABC company that is selling books actually, and these are the purchases they have made. You can see here on 2nd March this company purchased 1,000 books at $250 and the total cost is $250,000. On 15th May this company bought 1,500 units, but by the time cost increased to 300 and the total cost of purchase is 450,000. On 25th June, again they purchased 1,850 units and the cost now is 315. So total is 582,750. Now you can see the total is 1,282,750. This is the total cost of purchase. Now imagine you are selling 3,500 units in July. So what should be the cost under FIFO? So we know that FIFO is going to take first items bought in, that is going to take out first. So when they are selling 3,500 units, FIFO will look at the past purchases. The oldest purchase is 1,000 books at $250 and FIFO will consider that all these items are sold. So 250,000 is going to be cost of 1,000 units. Then again 1,500 units when they sold, they will go and look into the second layer of purchase. Now it is $300. So 1,500 multiplied by 300, 450,000. worth goods also taken out from the inventory, and this will go to cost of goods sold. Now 2500 is over. Now how many units need to be included in the sales? It is 3500. So we considered 2500. Next it is 1000 units, right? So this 1000 units we will take out from this quantity of purchase or this batch of purchase. So 1000 units, when I am removing out at $350, the cost is going to be this. So the total cost of the goods sold is going to be 1,015,000. And rest of the 850 units, it is still with you. You didn't sold it, right? So that is going to be at 315 in your ending inventory cost. And obviously, both if you add, it has to match with your total purchases, because whatever you bought is sold. Some of the items are sold, the rest of the items are with me. So this is what the concept of FIFO. Now when it comes to weighted average, we will not consider the cost by purchase. We will just add all the cost. First it is 1000 units at $250, then 1500 units at $300, then 1850 at $315, and these are the total cost. And this total cost divided by 4350 units or 4350 books, we will get an average of 294.885 for each book. Okay, now when you are selling it off, this is the cost you are going to consider. So when I sold 3500 units, I will multiply that with 294.885, and this is going to be the cost of the goods sold. And how many units are there now? 850 units. Again, multiply that with the average cost. You will get how many or how much we have in the inventory. And if you add this together, you will get 1,282,750. Obviously, this has to match with your total purchase. Okay, so this is the way the cost of goods sold and inventory is calculated under weighted average. And the main difference between weighted average and FIFO is that FIFO will be considering a layers of cost when it has to calculate cost of goods sold, but weighted average will just add all the cost and divide that by the total number of units, whether you purchased this month, last year, whenever it is. You just add all the number of units and add all the cost and take the total cost divided by the number of units. But in FIFO, you will be taking out your inventory values in terms of cost of goods sold based on the order in which they purchased. Okay, now this is what we are going to apply in EUP calculation for process costing also. So we can see here under weighted average cost, we assume that all cost, whether from a preceding period or the current one, are taken together. All the cost you are taking and assigned to produced units. So we have seen weighted average in the previous example. Therefore, the cost of EUPs in the beginning inventory are considered to have been spent and worked this period. So even the cost of the beginning inventory you will add to the cost of the current period. But under FIFO, these are more complex calculation that creates layers of cost of any units of production that were started in the previous production period but not completed, and another layer for any production that is started during this period. So you will have a previous period calculation and you will have current period. Under FIFO, you will have two layers of calculation. Okay, so we will see here under FIFO, the costs are included are only the costs that were actually incurred during the period. Under FIFO, what cost you will consider? What are the costs incurred in this period? Only that you will consider. But under weighted average, you will consider two costs. What is which are cost incurred during the period and cost associated with your beginning inventory. Both we have to consider under weighted average. But in FIFO, you will consider only the cost for the current period. And this is how we will calculate EUP under FIFO. First, you will see EUP needed to complete or beginning work in progress. What does this mean? For example, if you had 100 units of opening work in progress, which is completed by 30%. Okay, that means 70% of the work will be done this period, and 70% of this 100 or 70 units will be considered as the EUP needed to complete. We have to complete 70%, right? So 100 multiplied by 70%, you will get 70 units. Then we will have how many units you actually started this period and completed, which has no connection with the last period. How many started and completed, this you have to consider. Then how many needed to start, or we can say again, I have 50 units in the ending work in progress, but it is completed only by 30%. So that means we worked on 30% of 50, or we can say we worked on 50 units. So this is the EUP for ending work in progress, and where is that? This is the EUP for opening work in progress, and here how many units you started and completed. This is what this is how we will do the calculation of EUP under FIFO. But under weighted average, it is going to be a bit more easier. You will have only two factors to consider, which are number of units completed during the period. You are not segregating how many units were there in the work in progress in the beginning and how many units worked now. You are not considering that. You just consider how many units I completed. So you will take all the units, whether it is from previous period or the current period. You will take all the units, and also you will take all the cost from previous period as well as the current period. Then you will consider how many units are there in your hand now. So that is going to be the same way you will be calculating. So this is how you will calculate EUP under weighted average method. Here you have only two elements, but here you will have three elements. So we have an example here that will demonstrate the difference between FIFO and weighted average cost method. Here you can see 10 units of opening work in progress, which were 60% completed, you worked this year. So 60% completed in the previous period. So that means under FIFO, you will consider only 4 units this period. Why? 10 units started last period and 60% of the work is done already. So this year I am going to work on 4 EUP only, or units equivalent to 4 units. But under weighted average method, even though 60% is completed last period, you will consider all the 10 during the period, and also the all cost pertaining to all the 10 units you will be considered as if they are spent this period. That's the only difference in FIFO and weighted average method. The rest you can see here, 70 started and completed. It is same in both case. 40 units of closing work in progress, 20% completed. That is going to be 8. 20% of 40 is 8. Here also it is 8. So the difference of EUP coming here is 6 units. How we got it? That we are getting from the difference of opening. So basically the difference in FIFO and weighted average cost is just due to the opening work in progress and just due to the opening work in progress. Under FIFO, you will consider what is completed during the period only. Under weighted average, you will calculate, or you will consider last year and this year completion. Okay, so this is how you will calculate EUP under FIFO and weighted average. Now we have last topic in process costing, which is spoilage. we can see here spoiled units are the units that are in some way defective and not able to be transferred to next department. You are not able to transfer these items, these goods you produced, because those are defective and you have to stop working on it. Okay, so when there is a spoilage, both materials used and conversion cost expense for the spoiled units need to be allocated to spoiled units. So now you have started 100 units, or 90 was very good and 10 units spoiled, and you incurred cost on these 10 units, right? You incurred cost on these 10 units. So what we will do with this cost spent for these 10 units? So costs are assigned to spoiled units based on the number of EUPs. We can imagine this 10 units completed 60% only. So we can say the EUP for this spoiled unit is 6 units. So what we have to do, we have to calculate the total cost and we have to allocate the cost per EUP to this 6 units also. So some cost it will stay in spoiled units. And from the spoiled units, it will go to cost of the good units produced. The way all the cost, the way cost allocated to spoiled units will be treated depends upon the type of spoilage. There are two types of spoilage. One is normal spoilage, other one is abnormal spoilage. So what type of spoilage you have, the accounting treatment is going to be based on that. There are two classification of spoiled units. We have normal spoilage and also abnormal spoilage. So normal spoilage, these are the units that are expected to be spoiled in the production process. So you are expecting this is going to happen. For example, if you work on 100 units, based on my past knowledge, 2 units average will be spoiled. So this we can consider as average or normal spoilage. And any cost related to these 2 units, we will be allocating to the good units produced. So 100 units you worked on, 2 units gone bad, so I have only 98 units. So whatever the cost incurred for 2 units, that will be added to the cost of this 98 unit. So the cost assigned to normal spoilage are transferred to the next department as a part of cost of the good units. But when it is abnormal spoilage, as the name indicates, this is not normal. I was expecting 2 units to be defective, but I have 5 units defective, which is above my expectation. Or we can say 3 units in this case are abnormal spoilage. And the cost assigned to abnormal spoilage are expensed on the income statement. So whatever the cost added to these 3 units, we will not transfer to next department as a cost of goods sold or a cost of inventory. This we will expense it off immediately, because this spoilage happened maybe because of your inefficiency. It is not expected. So this will be considered as an expense and it will be immediately charged to income statement. Okay, so that's what abnormal spoilage is. Now, calculation of EUPs when you have spoiled unit, you have to add one more component here, which is this number of EUP for spoiled units. So you have normally completion of beginning work in progress under FIFO, then started and completed, then starting of ending work in progress, then you have spoiled units. So beginning, ending, started and completed plus spoiled units. But in weighted average, again you have units completed. So because here you don't have beginning work in process, started and completed and all. Total you will take unit completed, then ending work in progress. Also you will consider the spoiled units. So this is how we will calculate EUP when you have spoiled units. So whatever per unit cost you got, that you are going to allocate. In case of FIFO, you are going to allocate that to completion of beginning process, or how many units completed from the unit started previous year, started and completed, starting ending work in progress, and also spoil units. In case of weighted average, you are going to allocate the per unit cost to units completed, ending work in progress, and spoiled units. And we have some additional classification of spoilage here. Below are the additional terms similar to spoilage. You may have shrinkage. Shrinkage means this occurs when product evaporates or uses some quantity over time. We are not doing anything with that, but by itself, maybe the value of the uh, product will reduce, or the quantity of the product will reduce. We account for it like spoilage. If it is normal, as we have seen, charged to good unit. If it is abnormal, it will be charged to income statement. Same like that, you may have rework that occurs when spoiled goods are fixed and prepared for sale. So you are reworking on some of the spoiled units and you are spending money on it. When it is normally spoiled, you are working on normally spoiled goods, that cost will be charged to factory overhead account and allocated to all good unit. But if it is abnormally spoiled, the units, the cost spent on those units will be expensed. So same like you will have waste also. This is the material that is left over after the production is complete. It is simply unused and is now unusable material. So this also, if it is normally happening, you will be considering as the cost of good unit, but if it is abnormal, you will be charging to income statement. So that's it about process costing. I know process costing questions are going to be bit it is going to be little difficult, and you have to do a lot of practice. So we will do that practice in our question session, and that's it about this topic, which is process costing, and which is, I think, one of the toughest topic in section D. I hope you understand it, and thanks a lot for watching, and thanks a lot for being with me. See you in the next lecture. Thank you.